We'll move to our next guest, and as we do that, quick glance at the screen. Market is down but not out. The bulls are trying to fight back. We're just about 35 to 40 points lower on the Nifty at this juncture. Look at that. There was a tinge of green on the Nifty as well while we were speaking with Harsha. But now there's some selling. So interesting Friday morning playing out. But for the time being, we're putting the spotlight on the real estate space. And we have Mr. Ashok Kumar Tyagi, MD of DLF, joining in. Sir, so good to have you in. I mean, always wonderful to get perspective from you on the business and on the overall market. So, a couple of things that we really want to focus on are key talking points, so to speak. Obviously, we want to get an update on the guidance because you've done very well in the first half. So we need to see, how strong those demand trends are, the bookings target and the launch pipeline. So let me start by understanding your sense of demand in your home turf first, at your home turf, the NCR market. It's been a very good first half. You are already at 70% of your guidance, I think 70% plus. What are you expecting in H2? What is the consumer telling you?
Okay, so 2 points, Surabhi. Good morning. One is, as far as the consumer is concerned, I think the underlying demand for, I'd say, the more credible developers and the more credible products is there. I don't think there's a slowdown there, frankly. Yes, obviously, whatever you read in the papers in terms of, challenges, etc., going forward. I do believe, in fact, if I were to borrow a line from your conversation with your last guest, a tinge of caution is not a bad thing. But I believe that maybe some of the fizz may gradually start slowing down. But for the underlying, the credible guys, the 5 or 6 players who are, I think the underlying demand continues to be strong. As far as we are concerned, we had guided the market to a sales pipeline of ballpark 22,000 crores, 20 to 22,000 crores for the fiscal. We stick to that. So, I mean, we know we have done 15,000 plus in the first half. But, much as we would like it to be, this unfortunately is not like an auto assembly line where, every day you are launching something. So I think we would, for now, at least stick to our originally guided pipeline, launch pipeline for this fiscal of the ballpark 20 to 22,000 crores. Over the medium term, in fact, in March, we had come out with a five-year guide plan. And I think we have a pipeline of almost 60,000 crores of products lined up for potential coming to the market in the next 24 to 36 months. And all of them will gradually come subject to approval, subject to how the demand is shaping up. So I think we are, by and large, we have defined our grid rails. And I think we should hopefully keep on having a reasonably good ride on them.
Mr. Tyagi, hi, good morning. Prashant here. It's been a while since you've been on the channel.
आपने बुलाया नहीं?
हमने बोला, हम तो बुलाते रहते हैं आपको. आप तकल्लुफ करते हैं, but I think उम्मीद रहेगी आप आएंगे, और आएंगे. But sure. Mr. Tyagi, just a quick, I just want to get, we'll get to the launch pipeline, etc. I think you were at an investor conference and you've guided everything to the street. And maybe we can touch upon some of that stuff. But since you're coming on after a while, how's the consumer in your sort of core market holding up? I mean, is it as strong as it was when we used to speak 6 months, 1 year ago? Is the absorption as smooth? Just wanted to get some color.
So okay. So Prashant, I mean, to the point, in fact, to just supplement the reply that I gave Surabhi just now, I think, as I said, the major or the more credible players, where the customer has an underlying belief that these guys will deliver the products to the quality specs, etc., that they have committed. I think the demand, at least in the NCR, at Gurgaon definitely, and I think even in Noida, continues to be underlying strong. So what happens in any bull market, even in real estate, is that at times some of the non-serious players, for want of a better word, get on the ride. And I think over time, maybe some of them will start feeling the slowdown in terms of their specific thing. But I don't believe that for the more credible players, there is a challenge right now. Obviously, one needs to be sensible about the product. One needs to be sensible about pricing. One needs to be sensible about the location. But I think given the fact that at least for us, we have most of those things lined up pretty neatly, I think we don't foresee a demand slow down in terms of what we bring to the pipeline. We bring to the launch pipeline. We'd obviously need to be sensitive to the fact that you can't get You can't launch 50,000 crores in a quarter. In that sense, that will obviously be far more than what the market can absorb. But as long as there's a certain degree of interval between what we are launching and there's a certain degree of upgrade stroke variation in what we're offering to the market, I think the demand continues to be good.
Right. So like to like, everything else excluded for DLF, it's the environment is same. I mean, you are a credible player. You're the oldest player, perhaps. There's no difference, or there is some volatility in terms of absorption, because as you said, non-serious players may be overbuilt. There's too much maybe supply. They've, in some ways, at the margin, spoiled the market. I mean, are those things affecting you in any way, pricing-wise or volume-wise?
So the simple answer is no. I mean, the last major launch that we got to the market was, the Privana North, which did extraordinarily well. The resale market, which I've always maintained is a very secular indicator of how the market is going on, continues to be very bullish and very strong, at least in our micro markets, both in terms of the demand for new transactions happening, as well as the price points and the price accelerations there. So I think the secondary market continues to be strong, which leads us to believe that I think there continues to be underlying demand for good primary products.
All right. Hi, Mr. Tyagi. Good morning. Good to see you in. It's been a while since we chatted as well. But let's get a couple of aspects out of the way then. The rentals. You have the completion of some retail projects, right? Midtown Plaza, Summit Plaza, Goa Mall. How do they aid rentals, if you could help us out with that? I think you all were talking about exit rentals in FY27 of around 400 crores. If you could just reconfirm that number. And also your balance sheet is in fantastic shape. I think you're sitting on close to around $1 billion. How will you be using this for expansion activities? Is there a sweetener you're going to be looking to give your shareholders?
Okay. So, Nigel, let me reiterate that when my communications guy told me that you will be one of the anchors, I had to go through my numbers, because knowing your posture for numbers, in that sense. So anyway, so the three malls that we are very close to completing, one in Golf Course Road, one in Midtown in Moti Nagar, Delhi, and one in Goa. You're right, should ballpark on a full throttle basis have a rental in excess of the number that you mentioned. Our overall rental run rate fiscal 26 exit should be in the range of 6,000 crores, and fiscal 27 should be in the range of 7,000 crores across Cyber City, the DLF rental projects, as well as Atrium Place, which is our joint venture with Hines. So I think the rental space continues to be very strong. Our vacancy levels are in the mid-90s, and that's our occupancy levels are in the mid-90s. So I think the rental space continues to be strong. We are focusing more on the retail piece also now. There is a bigger retail project coming up in Gurgaon called Mall of India Gurgaon, which should hopefully in the next 3 odd years, see completion. So I think that's what the ballpark, sketch of the rental business is.
Mr. Tyagi, so we'll come to the cash as well, but given your big portfolio, malls, commercial spaces, you don't want to do a REIT? REIT guys have been doing very well and attracting a lot of investors as well.
So yes, in the last, I'd say, couple of quarters, the REITs are doing well, which is wonderful, because I think it's a very interesting product. Mm-hmm. We have been very clear, Surbhi, that we are not pro or anti-REIT or pro or anti-IPO or anything. But we have no intent of taking Cyber City to the public markets till such time that our partner, which is GIC, wants us to. I mean, as and when they believe that there is a requirement for them to sort of guide us to move Cyber City to the public markets, we'll be more than open. That's an agreement that we have with them. But where we are today, frankly, especially with two very major projects underway, one in Gurgaon and one in Chennai, we don't believe that at least the next 3 odd years is the time for us to go public there.
Okay, so no REIT at least for the next 3 years. Now, quickly, Nigel's question on how you'll use that cash, 7,000 crores plus, and also, since the first half has been strong, and you remain optimistic on your business at least, will you revise the guidance, which is currently at 22,000 crores?
So the answer to the second one is no. we won't revise the guidance,
Why have you already done
Eventually
70% of that guidance? So why are you not hiking it higher?
This is not a linear business, in that sense.
True, true.
So whether we can get all the requisite approvals, etc., for the next big launch before March. So I think, right for now, we'll stay with the guidance that we have. To the cash question of Nigel and you, I mean, that's the only side which we have been very transparent in our analyst presentations. That yes, we are sitting on 7,700 odd crores of net cash position, which frankly is increasing by almost 1,000 crores plus every quarter. The issue today is that if you look at our presentation, almost 8,000 crores is today locked in the 70% RERA account. I mean, so yes, the cash is there, but frankly, as we speak right now, the cash is only generating FD returns, and that is all that the cash can generate. We believe that from the early part of the fiscal 27-28, we'll enter that virtuous cycle of this generation of projects hitting their completions and the cash being released. So, to your question of what to do with that additional cash, I think is a question that we will answer then. We have broadly said that the cash will be used for essentially two things. One is clearly increasing shareholder returns, which we have been increasing at a certain pace over the last 4 years. B is investing back in growth. And C, frankly, if hopefully we will have surplus cash, we will see how we can also, increase and maximize the returns once we have no constraints of the RERA 70% account.
All right, Mr. Tyagi, can't let you go without asking you which part of the cycle we are in the real estate cycle. The pessimists are saying very close to the end, optimist, and you're sounding very optimistic. They're saying we're at the start of it. Just day one of the 5-day test match. Where are we?
So, I mean, what is bilkul data backed is that we are, I think, in the 4th year of the upcycle for sure.
And the upcycle is 10 years.
No. So there, I think, I'd say I would have, this is from taking a guess, 7, 10, 15, 18. The only thing that I'd say is, Nigel, that unlike the last down cycle, if and when the down cycle comes, and you're right, at some stage it will, most of the grade A developers are virtually completely deleveraged today versus the situation 10 years back when most of us were saddled with leverage. So I think all of us are hopefully far better equipped to handle the down cycle as and when it comes.
Okay, all right, Mr. Tyagi. Always a pleasure, sir, speaking to you. Thanks a lot for the compliment as well. I'll keep at the numbers. Thanks for joining in, giving us the guidance. You're sounding optimistic. Year 4 of that real estate bull market cycle that we've seen. We chat up soon and wish you all the best with the new launches as well.